Hello traders, welcome to my channel. I made a video recently on institutional reference point and I explained what fair value gap and order block is, and I said I'll be explaining two in each video, two of the institutional reference points in every video. Today I'm going to explain what I called mitigation block and breaker block. Mitigation block and breaker block. I want you to stay with me till the end of this video. I know it's going to be very helpful to you because I'm going to patiently explain how mitigation block and breaker block is. So if you are watching this video, please like, share and follow. So welcome back. Now, how can you identify a mitigation block and order block? I want you to know that this thing is not difficult. It is not hard. If you can patiently listen and try to understand what I'm saying, it will be easy. So let's start. I said we have mitigation block. How do we identify it? Mitigation block is created on the chart when you see price create a high and then price takes that high. Can you see it? Price takes the high and price dump and move to the upside to mitigate an order block here. I told you the last time that without fair value gap and probably order block, some of these institutional reference points might not be available on the chart. Now, if you look at this price action, there is a fair value gap and an order block here, a fair value gap and order block here around this place. So the moment price comes to this place and then you couldn't break above this high, price actually break above this high, what we expect is that price should mitigate this area and then break above this high. But price didn't break above, price just reacted and then mitigate either a fair value gap and order blockade, then price dump. Meanwhile, we are expecting the price to actually break above this high and then comes down to this level again and then give us another high. But this time around, there is nothing like that. Price didn't even break above the previous high, and then it just mitigated a fair value gap or an order block around this region, and then the price dumped to the downside. It dumps to the downside. So it is also similar to a breaker block. It is similar. This is a mitigation block. This particular one is a mitigation block. Price break a particular high, it created another high, and then we expect another break of structure according to how a normal trend would be. But price couldn't do that. Instead, it mitigated a fair value gap and order block around this region, then dumps to the downside. That is a mitigation block. Look at it. Price mitigated a fair value gap and order block around this region, and then dump to the downside. That is mitigation block. So the mitigation block is located around this region. Yes, the mitigation block is located around this region. This is where the mitigation block is. What is supposed to happen is that price is supposed to go up, break structure around this place, and then comes back to this place and then move to the upside. But this period, price couldn't break above the high, and then it's mitigated this region and then dumps to the downside, neglecting and disrespecting the other block around here. So if an order block that couldn't hold price and couldn't make price to break structure is called a mitigation block. It is called a mitigation block. An order block that couldn't make price to break a recent high or a recent low and then dumps to the opposite direction, it is called a mitigation block. I'm going to tell you how it works, but before I tell you how it works, let me explain how a breaker block is. A breaker block, this thing is easy, just follow me and listen. Now this is a breaker block. A breaker block is identified when price actually creates a high. Look at it, price created a high here, and then price took the high, then move down to you know an order block here or a favor gap, and then price break structure to the upside. So after price break structure, what we actually expect is that price should actually come down to this region, and then this region should hold the price and then push it back to the upside. But now what happened is that price this region couldn't hold price, and then price disrespected it. So how do you identify it? You see this region broke structure. Yes, broke structure. Then there is an order block here, and then we actually expect the price to come down to this region and then move to the upside. But what happened is that it price disrespected the order block available in this region, then break to the downside. That is what a breaker block is. So a breaker block is an order block that couldn't hold price. It was able to break structure. Yes, it was able to make price to break structure of the previous high or the previous low, and then couldn't hold price to break the next structure. That is what a breaker block is. So how do you take advantage of breaker block? How do you take advantage of breaker block? It is very, very easy. Now, there is another block available here. Price, it couldn't hold price the first time, couldn't hold the price when price actually traced down into it. Now, how do you take advantage of it? This is how you take advantage of it. By the time price is coming back, you know, to that area, it's going to stand as a barrier, as a resistance for the price to go further to the upside. What it does is that it will now be an assistant to push price to the downside. That is the work of a breaker block. So it couldn't hold price, which means that it fuck up the first time price is coming down to it, and it's not going to do that anymore. What it's going to do is that it's going to make price to fall. It's going to make price to fall to the downside. The same scenario when we flip it is going to make price to go up. And mitigation block, it is when an order block couldn't break structure of the previous high or the previous low, and then it couldn't even hold price again. So how do we take advantage of it? Similar to the breaker block, when price comes back to that region, it will stand as a resistance for price to break to the downside, and if you flip it, it will make price to break to the upside. That is what a breaker block and a mitigation block is. So if you have any question, let me know in the comment section. I'm going to explain it to you in a better way. And if you have not subscribed to this channel, please do like, share and subscribe. Godspeed.